Okay, let's unpack this. Today, we're diving into the Shinfin network and its native digital asset, the XDC token.
Yeah, it's a fascinating one.
Right. Our mission here is really to cut through the noise, give you clear insights into XDC's tech, its real-world uses in trade and finance, which is complex.
Definitely complex.
And also its legal standing, which is pretty unique, plus, what's happening in the market, future outlook, all that.
And we've pulled from quite a mix, haven't we? Formal legal docs, market reports, even what the community is saying.
Exactly, a whole stack of sources.
What's compelling, I think, is how you get these different views, the rigorous legal take, the tech side, market sentiment, all focusing on this one asset.
Yeah.
The aim isn't just to tell you what XDC is, but really why it might matter in this, evolving digital economy.
Okay, so let's kick things off right at the ground level. What exactly is the Shinfin network? What's the big problems trying to fix?
Well, at its heart, Shinfin is tackling something huge. That global trade and finance deficit. We're talking trillions of dollars.
Right.
So it's not just another crypto coin. It's engineered as a next generation financing mechanism. The idea is to complement existing financial systems, not necessarily blow them up, make trade more efficient, more accessible.
And the tech behind that. Our sources mentioned this hybrid blockchain architecture. Sounds powerful.
It really is. That hybrid design is kind of Shinfin's secret sauce, you could say.
Okay.
It merges the best bits of public and private blockchains. You get the transparency and security from the public side, which you need for trust, but also the privacy and auditability of a private chain. That's key for getting businesses, enterprises on board and meeting regulations.
And it's built on tech people might know.
Yeah, it's a fork of Ethereum and also JP Morgan's Quorum, which was already focused on enterprise use. So a solid foundation.
Got it. And the XDC token itself, what's its job in this whole network?
The token. XDC is basically the lifeblood of the Shinfin hybrid blockchain. Think of it as the settlement layer. For all the dApps, the decentralized applications built on top of Shinfin, it's what you use to pay transaction fees, pay for goods and services within that ecosystem.
Okay.
And critically, you need to stake XDC tokens to participate in validating transactions. That's the consensus mechanism.
Right, staking.
Shinfin uses something called XDPOS, Delegated Proof of Stake. It's known for being efficient, scalable, good for securing the network without, massive energy use.
So utility beyond just payment. And you mentioned nodes earlier, different types.
Oh yeah, the network structure. There are basically four main kinds. You've got full nodes. They keep the whole transaction history.
Okay.
Reference nodes, they help pass transactions around. Light nodes are more for private networks, keeping track of local stuff.
And the last one? Auditing.
Right, auditing nodes. These are interesting because they can access both public and private data. Super important for things like regulatory checks or reconciling with older systems. Makes it more suitable for businesses,
Definitely sounds enterprise ready. Now, this next part feels really key, the legal side. How does something like XDC fit into the rules we already have? We found this formal legal opinion, Ochsner Law, January 2021, commissioned by Shinfin themselves in Singapore.
Yeah, that opinion is significant.
What did it actually conclude? Specifically about how Liechtenstein law sees it for listing on their TT exchange service providers platform.
Right. The TT exchange in Liechtenstein, which handles tokenized assets. The big takeaway from that legal opinion is that under their law, XDC does not classify as a financial instrument.
Not a financial instrument?
And also not electronic money.
Okay, that's a clear statement. Why not? Why doesn't it fit those boxes?
Well, it's not a financial instrument because owning XDC doesn't give you a debt claim or equity in Shinfin.
No shares, no bonds?
Exactly. It doesn't promise you a slice of future profits or anything like traditional securities. Now, they did note that one specific feature, the hedge pool contract.
We'll get to that.
Right. That could maybe be seen as a derivative, potentially. Yeah. But the token itself, no. And it's not electronic money because the white paper didn't say you have a claim against Shinfin's assets based on funds you put in, and you can't just redeem it for face value like, say, a stablecoin.
So if it's not those two things, what is it considered legally?
It tends to get categorized as a hybrid utility payment token. That's based on how bodies like ESMA, the European Securities and Markets Authority, and the EBA, European Banking Authority, classify tokens.
And why does that classification matter so much for for users or businesses?
It's huge because it generally puts XDC outside the scope of the really heavy regulations for traditional financial instruments or e-money in places like the EU. It provides a clearer, potentially easier path from a regulatory standpoint.
Okay, so that covers the tech and the legal angle, which is clearer now. But let's talk impact for actual businesses, for people. How does this solve real problems? We hear about this massive global trade finance cap, like $1.6 trillion a year.
Yeah, it's enormous.
And huge infrastructure needs, remittance costs, hitting small businesses. How does Jinkin actually tackle that?
This is where their platform, TradeFinex, really comes into play. You should think of TradeFinex as this purpose-built marketplace.
Okay.
It's designed specifically to connect all the different players in trade finance. You've got the beneficiaries, governments, companies needing funding. You've got suppliers providing the goods or services.
Yeah.
And you've got the financiers, the investors.
All in place.
Exactly. Globally on this single, transparent network built on Jinfin.
And what makes TradeFinex work? What are the sort of key features?
Its real power comes from using legally binding digital smart contracts. These cover everything, finding deals, negotiating, signing, execution, all digital.
Streamlined.
Very. And it allows for real-time cross-border and domestic payments using the XDC token. That massively speeds things up, cuts costs compared to the old ways.
You mentioned IoT integration too, Internet of Things.
Yes, that's a really innovative part. It lets you track assets in real time, monitor financial performance. Imagine you're financing a shipment. You can see exactly where it is, how it's doing.
That builds trust for the financiers, I bet.
Absolutely. Huge visibility boost. And there's also this hedge pool functionality. This is clever. It protects people from the XDC token price swinging up or down.
Ah, volatility protection.
Right. Payments get settled based on the agreed fiat currency value, like dollars or euros. That's essential for long-term deals where you can't risk the token price changing wildly.
That sounds genuinely useful. Can you give some concrete examples? How does this play out in the real world?
Sure. Take a small business, an SME, struggling with getting paid on time. For invoice factoring, they can basically mint NFT receipts on XDC and auction liquidity.
So tokenize their invoices.
In a way, yes. Get some cash flow much faster. Or look at cross-border payments. There are solutions like Impel using the XDC network to send payment messages in the standard ISO 2022 format. Makes international payments smoother. In supply chains, you can have smart contracts tracking deliveries using IoT sensors. Payment gets released automatically when a milestone is hit, delivery confirmed, for instance. Fewer disputes, faster payment.
Makes sense.
Even things like online travel booking, real-time payments, escrow, so money's held safely, the hedge pool. It reduces all the back and forth reconciliation, cuts commissions, means faster refunds.
Wow, quite a range.
It really is. And it goes from these kinds of business uses right down to, say, medical emergency services. There was a tie-up mentioned with AirNets in India for air ambulances using instant XDC payments for critical services.
That's very specific. And impactful.
Exactly. And large companies can even use it internally, building efficient ledgers for their own transactions, KYC ML records, employee data, streamlining their own internal processes.
So the picture emerging is one of broad, practical application.
I think so. The range is striking, you know? From tiny emergency payments to complex infrastructure deals, it really shows they're focused on moving beyond just crypto speculation to solving tangible problems, especially that combo of IoT and smart contracts for tracking and transparent payments. It's a big step for trust in global trade.
Okay, let's shift gears a bit. Fast forward to more recently, May and July of this year, 2025. What kind of momentum are we seeing, particularly around institutional adoption, regulatory stuff?
Yeah, the period from May to July 2025 seems to have been pretty busy. There's definitely a visible strategy focused on building out that compliant institutional level infrastructure.
Like what specifically? Any big integrations?
Several key ones. In May, Tilla came on board. They provide these institutional-grade MPC wallets.
MPC.
Multi-party computation. It's a very secure way for institutions like banks to manage digital assets without one single point of failure. Think role-based permissions, automated workflows, very important for banks.
Boy, serious stuff.
Then Labor partnered up, also in May. They enable on-chain issuance of tokenized investment funds. We're talking strategies from big names like BlackRock, Brevin Howard made available to qualified investors on the blockchain.
Tokenized funds, wow.
And crucially, Elliptic integrated their AML anti-money laundering tools in May. Transaction monitoring, wallet risk scoring. That directly tackles a huge concern for regulators and traditional finance players.
Right, compliance is key for them.
Absolutely. Then moving into July, we saw a 21 shares launch an XDC ETP. That's an exchange-traded product on Euronext Paris and Amsterdam.
So regulated exposure for investors.
Precisely. Makes it much easier for institutional money to get involved in a regulated way. Also in July, a partnership with Etc. was announced for MiFID II compliant trading of digital securities, specifically tokenized real-world assets.
RWA focus seems strong.
Very much so. And just to cap it off, Shinfin's co-founder Ritesh Kakad was featured live from the New York Stock Exchange on fintech.tv in July, talking about the move to proof-of-stake and XDC's enterprise role. High visibility.
That's a lot on the institutional front. So what about regulation and policy during that time?
Also quite active. Back in May, the XDC network joined the MiCA Crypto Alliance. That shows commitment to aligning with the EU's big crypto regulation framework, markets in crypto assets.
Proactive on MiCA.
Seems so. Then in July, the XDC Foundation became a member of the Digital Chamber of Commerce in the U.S., getting involved in shaping blockchain regulation discussions there.
Getting a seat at the table.
Right. And a potentially major development was the Genius Act passing in the U.S. on July 18th. This set the first federal rules for stablecoins demanding full reserve backing. Transparency.
How does that help XDC?
By creating regulatory clarity around stablecoins, it indirectly strengthens the environment for XDC's focus on RWA tokenization and potentially operating stablecoins on its network. Clearer rules are generally good for adoption.
Makes sense. And technically, any big upgrades or ecosystem growth spurts in May, July?
Oh yeah, the tech side kept pace. The XDC 2.0 mainnet upgrade was rolled out by July. This brought performance improvements, faster finality, better security, and integrated some standard Ethereum improvements, the EIPs, for more functionality.
Keeping the engine tuned.
Exactly. And a big one for interoperability. Layerzero and Stargate integration happened around July 9th. This boosted XDC's omnichain abilities, meaning XDC tokens can now move much more easily and securely between different blockchains, think Ethereum, Solana, Arbitrum. Layerzero and Stargate are like the bridges, using this OFT standard to make it seamless. Big deal for liquidity and usability.
Connecting the islands, basically.
Pretty much. Plus, they were active in fostering development. Involvement in a Hedera AI hackathon, running their own RWA developer sprint focused on AI agents for tokenizing real-world assets.
AI and RWA is interesting combo.
Yeah, building agents for things like credit risk checks, document verification using AI on the blockchain. And they kicked off their second RWA Tokenization Accelerator program with Plug and Play, aiming to bring more assets and traditional finance players onto the network.
And specific RWA projects gaining traction.
Yes, Polytrade launched its RWA marketplace on XDC in May, offering tokenized trade finance assets, even fractional investing. And Comtech Gold, which offers Sharia-compliant tokenized physical gold, continued its expansion on XDC. There was also a Cointelegraph article mid-July highlighting how XDC helps tackle that huge trade finance gap by tokenizing documents, cutting processing from weeks to hours.
So putting it all together, this flurry of activity in mid-2025, what's the main takeaway?
If you connect the dots, what you're seeing is a really clear, deliberate strategy. It's all about building that compliant, institutional-grade infrastructure. The ETPs, the regulatory memberships, the AML tools. These aren't random. They're necessary steps to attract serious capital from traditional finance. It really underscores that while cool tech drives things, you absolutely need to meet established financial standards for long-term success and widespread adoption, especially in these big, complex markets like trade finance. They seem to get that.
Okay, tech, legal, real-world impact, recent momentum. Check, check, check. But let's face it, for a lot of people, the bottom line often comes down to the market. Price, predictions. What are our 2025 sources telling us about XDC's market performance and where it might be headed?
Right, the market perspective. Well, looking at July 2025, XDC was trading somewhere in the, let's say, 0.6 to 11 cent range. Market cap floating around $1 to $1.5 billion.
And performance this year?
Pretty strong, actually. Sources talk about explosive growth in 2025. There was a big 66% surge in July alone, and over the full year leading up to that point, something like a 227% increase.
Wow, those are serious numbers. What about looking ahead? Price predictions seem all over the place sometimes.
They really are. You get the full spectrum. On one end, you had some very optimistic folks on Reddit back in January talking about XDC hitting Get this, $74.30 by December 2025.
$74. Seriously.
Yeah. Though, to be fair, even within the community, many people called that crazy or stupid, highly speculative, let's say.
Okay, so maybe filter that one out. What about more grounded forecasts?
Right. Sources like Coinoswap, looking at it in July 2025, give a more moderate range. Conservative predictions around 0.45 cents, maybe $0.08 is a moderate target, and bullish reaching maybe all 0.12 cents for 2025.
Still growth, but more contained.
Exactly. And looking further out, their bullish view for 2030 was around 0.50 cents.
$0.50 by 2030. Okay, what are analysts saying?
Analysts quoted in Blockchain Magazine around July saw potential averages for 2025 maybe in the 0.09 to $0.17 range, with some ambitious targets maybe hitting 0.20 cents to 24 cents.
So consensus seems to be somewhere between, say, 8 cents and 20-something cents for 2025.
Roughly, yeah. There was also a specific prediction from CoinFomania back in January, projecting a potential reach of 0.292334 by July 25th, representing a big return. So still bullish, but varied targets.
And what's driving these positive price movements, according to the sources?
It really comes back to the fundamentals we've been discussing, the technical upgrades like XDC 2.0, the growing adoption in enterprise and trade finance actual pilots, RWA instruments going live.
The partnerships.
Definitely. Those strategic partnerships, Arcax, layerzero, Utila, Libre, Elliptic, Stargate, they all add credibility and functionality. Plus the ecosystem growth, like the RWA accelerator, DeFi integrations, it all builds momentum.
Makes sense. But it can't all be smooth sailing. What are the risks, the potential headwinds?
No, absolutely not. Our sources do flag some real challenges. One big one is just the lengthy enterprise sales cycles. Getting big companies fully onboarded takes time. That can slow things down.
Bureaucracy and process.
You got it. There's also competition from other ISO-ready chains. Networks like XRP, Stellar, XLM, Algorand, layerzero are also targeting similar spaces, especially cross-border payments and CBDC-related areas.
So not the only player.
Nope. And the ever-present elephant in the room, regulatory clampdowns. That remains a potential wildcard for the whole crypto space, not just XDC. Uncertainty there can always dampen sentiment.
Right. So this really raises a key question for anyone listening. With all these predictions, from wild to moderate, how do you make sense of it? How do you sift through it all?
That's the crucial point, isn't it? I think the key is always to try and anchor these predictions back to the fundamentals we've laid out. Does the price movement seem connected to real-world utility being proven?
Like the trade finance adoption.
Exactly. Or is it linked to solid institutional integrations like the ETP or the secure wallets? Is the regulatory path becoming clearer, like with the mica work or the legal opinion?
So look for the why behind the price.
Precisely. While those, moonshot numbers are exciting to talk about, the more grounded forecasts often seem tied to hitting specific measurable milestones. Things like achieving over $1 billion in tokenized trade finance RWAs or integrating with Tier 1 custodians.
Tangible progress.
Right. That shows a path to value creation that's based on more than just hype. It's about real economic impact. That's probably the healthier way to look at it.
Okay, so wrapping this up, what does this all mean for you listening in? We've gone deep on the XinFin network, the XDC token. We looked at its hybrid tech.
Its specific legal classification in Liechtenstein, which isn't trivial.
And its big ambition to really change how global trade and finance works. We saw that definite surge in institutional interest and activity through mid-2025.
Yeah, alongside the whole spectrum of market predictions, from the highly optimistic
to the more carefully calculated ones, but all seemingly tied back ultimately to its real-world use and how well it navigates the tricky regulatory waters.
What I find really fascinating here is that constant interplay. You've got the high energy, sometimes speculative vibe from parts of the crypto community. And then you've got the very deliberate, compliance-first, methodical work needed to get big institutions comfortable. It's almost two different worlds converging.
Yeah.
And it really makes you think, doesn't it? In this increasingly digital world, what's ultimately going to drive the long-term value and success of assets like XDC? Is it the bleeding edge tech? The regulatory clarity, or just pure market momentum and belief? Which nuggets of knowledge matter most?
That's a great point to ponder. As you continue navigating this whole digital finance space, maybe consider how all these pieces ago, the legal opinions, the tech upgrades, the ecosystem growth, the market buzz, how they all fit together to shape what you'd call a well-informed decision, whether for investment or business. What single factor out of everything we discussed stands out to you as the most critical for XDC's future? Something to think about.